Hello, I hope this finds you well. Today is Friday, January 15th, 2016, and in less than 5 minutes, I will share with you a brief overview of the markets last month and last year. I will share some thoughts about the current market volatility, and we'll end with our outlook for 2016. There is no doubt about it, 2015 was a lousy year in terms of returns. But it was also a year of divergent themes, which I think is interesting. On one hand, here in the US, we had a soaring dollar, and on the other, plunging oil prices. Our Federal Reserve here in the US began to tighten or to increase interest rates, while the ECB, or European Central Bank, began easing or decreasing interest rates. And lastly, developed economies grew while emerging economies began to slow. The markets experienced a ton of volatility last year and yet ended the year about where they started. The S&P 500, the main benchmark that we track here in the US, eked out a small gain, but only because of a small dividend paid. Developed international markets were up in local currency terms, but down if you look at them in US dollar terms. And emerging market equities were down substantially, both in local currency terms as well as in US dollar terms. So that brings me to the question, what do we expect for 2016? The new year has brought with it a lot of market volatility, as you know, and we expect that will continue. But I think the most important question that investors should ask themselves right now is, are we heading into a recession? Based on the 5 recession indicators that we track, we still think the probability of recession in the next 12 months remains low. And so, as long as that is the case, then our expectation for returns is in line with average returns in late stages of economic cycles, which is going to be mid-single-digit returns. I think it's also important to remember that investing is a marathon and not a sprint. It requires high levels of endurance. Volatility has always been part of investing, and it always will be. And even though volatility is not comfortable and it's not fun to go through, it is important for the markets and healthy for the markets to reset from time to time. I hope this was helpful. Thank you so much for taking the time to watch it. And if you have any questions, please feel free to give me a call. Take care.